LyondellBasell just dropped their fourth quarter and full year 2025 earnings, and if you're invested in the chemicals sector or just want to understand where this industry is heading, you need to hear what CEO Peter Vanacker had to say. He called 2025 one of the most challenging and longest downturns in his entire career. But here's the thing. Despite all the pain, this company is positioning itself perfectly for what comes next. Let me break down the 10 most important takeaways from this call, counting down from number 10. Number 10, the challenging market outlook. Peter Vanacker didn't sugarcoat it. He described 2025 as one of the most challenging and longest downturns in his career. This isn't just corporate speak. The entire chemical industry has been struggling with weak demand, trade disruptions, and margin compression that's hitting every player in the space. But acknowledging reality is the first step to navigating through it. Number 9, strong cash generation despite the downturn. Even at the bottom of the cycle, LyondellBasell generated $2.3 billion in cash from operations. Their cash conversion ratio hit 95%, which is industry-leading. This shows that even when times are tough, the company's operating model is resilient and they're maintaining discipline where it counts. Number 8, industry margin depression hitting hard. Here's the brutal reality. Industry margins were approximately 45% below historical averages in 2025. That's even worse than the already difficult conditions in 2024. North American polyolefins margins hit their lowest levels in over a decade. This isn't just a LyondellBasell problem. It's an industry-wide crisis driven by global overcapacity and weak demand. Number 7, export market dynamics and competitive positioning. LyondellBasell exports only 34 to 38% of their production compared to the industry average of 48%. Why does this matter? Because they have a more differentiated product portfolio that sells better domestically, making them less dependent on volatile export markets where margins have been essentially zero. Number 6, record safety performance. In 2025, LyondellBasell achieved their safest year in company history with a total recordable incident rate that even surpassed their previous record from 2022. This happened despite significant maintenance and turnaround activity across their sites. Safety excellence might not move stock prices directly, but it reflects operational discipline that absolutely does. Number 5, cash improvement target for 2026. The company is targeting an additional $500 million in cash improvement for 2026 compared to 2025. This is on top of the cash discipline they already demonstrated. They're doubling down on controlling what they can control while waiting for the market to turn. Number 4, value enhancement program extension. LyondellBasell exceeded their original value enhancement program target, achieving $1.1 billion in recurring annual EBITDA in 2025. Now they're raising the bar to $1.5 billion by 2028. These are real, sustainable improvements based on mid-cycle margins, not temporary fixes. Number 3, MO Retech, One advanced recycling progress. Construction on their MO Retech, One plant is progressing well and on track for a 2027 startup. This is their bet on circular economy and advanced recycling technology. While they've scaled back capital expenditure in some circular solution areas, they're staying committed to markets with supportive regulation, like Europe. Number 2, European asset sale moving forward. LyondellBasell is divesting 4 European assets with completion targeted for the second quarter of 2026. This is part of their portfolio transformation strategy, getting out of structurally challenged assets in Europe, where energy costs are higher and competition from imports is intense. And the number 1 takeaway, market rationalization is accelerating. This is the most important thing investors need to understand. Since 2020, there have been 23 million tons of capacity rationalized or announced for closure globally. This doesn't even include China's anti-involution efforts. Europe has seen around 12 million tons closed or announced. South Korea is looking at nearly 4 million tons. As Peter Vanacker said, the longer we stay at the bottom, the closer we get to the recovery. And when that recovery comes, LyondellBasell will be positioned to capture significant value with their low-cost positions and world-class technologies. The pain is real, but the rebalancing is happening. Drop your thoughts on LYB in the comments below, and don't forget to subscribe for more earnings analysis from Earnings Central.